Hi, Alpha 7 friends. I didn't forget you. I'm sorry. I need to be uploading way more, and I will this week. I promise. I definitely appreciate all the new subscribers. We got to keep it up, guys. Thank you. Thank you. And I want people to appreciate reading again. And we're hitting this book. This book is getting more and more interesting. If you haven't checked me out on my other channel, Dia Dash, I go into consumer protection a little bit, but on this channel, I can do that too because that's great for everyone. And in this book, it kind of exposes certain things. So in chapter 4, we're now in chapter 4, baby. We're on page 115. It goes into accounting. So I'm going to read a little bit to you today, and we're going to keep going the rest of this week. I know it's already dark out, so this light is not doing me any justice. So thanks for being patient with me, guys. I so appreciate you. So I'm going to flip the camera over to my little spot here. As you know, my friends, we've been going into this cool book. It's called Doublespeak: From Revenue Enhancement to Terminal Living: How Government, Business, Advertisers, and Others Use Language to Deceive You, by William Lutz. Okay? So, this is chapter 4. Let me just make sure I'm not bullcrapping to you guys. Yep, that's true. We are on chapter 4. I know it's been a couple of days, but I'm going to keep going, okay? Because it gets into the double speak of accounting. And when you start dealing with consumer protection and all that, you're going to see all the shenanigans are involved with a lot of the bookkeeping. So let's see what we can learn today. The double speak of accounting. You may think that since accounting deals with numbers, not words, accounting is free from double speak. You couldn't be more wrong. If you think accounting is a value free, exact, objective science, you'd better stay out of the stock market because one of the most creative areas for accounting is that pride of industry, the corporate annual report. A corporation's annual report supposedly presents a clear, precise picture of the financial status or health of the company. After all, numbers don't lie. Moreover, a corporate annual report is examined before publication by an outside accounting firm to ensure its accuracy. An annual report must therefore be a good guide to a company's financial position. If you believe that, I have some retirement land in Florida and a vacation lot in Arizona I'd like to sell you. And to get you to these places, I'd sell you the car my sainted grandmother drove only on Sundays to church. The numbers in a corporate report do not imply precision, nor do the numbers represent reality. The world is not the way the numbers in a corporate report tell you it is. What the numbers do represent, according to Adam Smith in his book Super Money, is a lot of imagination at work. The combined imagination of corporate executives and very bright and high priced accountants. Those bean counters really earn their big salaries. When an outside accounting firm examines the corporation's report and certifies it, the accounting firm states only that they have examined the books of the corporation and that the books confirm or conform to generally accepted accounting principles. As Smith notes, it's safe to say that for a generation, no one knew what those 4 words meant. That's interesting. We do hear about the gap principles when you deal with consumer protection. Smith quotes Leonard Spacek, senior partner and chairman emeritus of Arthur Andersen and Company, one of America's biggest and most prestigious accounting firms. Here, according to Adam Smith, is what Mr. Spackett has to say about accepted accounting principles. I'm not sure, is it Spacek or Spackett? Almost like Spacey, right? How my profession can tolerate, wow, guys, look at that. How my profession can tolerate such fiction and look the public in the eye is beyond my understanding. I suppose the answer lies in the fact that if your living depends on playing poker, you can easily develop a poker face. My profession appears to regard a set of financial statements as a roulette wheel to the public investor. And it is his tough luck if he doesn't understand the risks that we inject into the accounting reports. Accounting Doublespeak provides a number of ways for the financial status of a company to be reported so that $1 of earnings can become 50 cents or $1.50, depending on the way that dollar is reported on the financial statement. Depreciation can be changed from accelerated to straight line. The valuation of inventories can be changed. Adjustments can be made in the charges for the pension fund. The costs of a new project can be deferred until the project produces revenue, or research can be capitalized instead of listed as an expense. The list is endless. The numbers in an annual report may not be what they seem. They can certainly be a little bit or a lot of the creative writer in the accountant. Crazy, guys. In 1981, a corporation called OPM Leasing Services not only went into bankruptcy, but its founders, Mordecai Wiseman and Myron S. Goodman, were sentenced to long prison terms. From its founding in 1971 to its demise in 1980, OPM was without funds and lost money every year of its existence. Yet it continued to grow and borrow large amounts of money, 500 million at one time. How is this possible? Having a good accounting firm doing the annual reports really helped. Mr. Goodman said that he shopped around for an accounting firm that would be flexible, one that would certify financial statements that painted a rosy picture but would not detect the least frauds in which the company was engaging. He found his accounting firm one of the 12 largest in the country, which miraculously changed losses and deficits into profits and a positive net worth. As the story goes, however, they needed some encouragement. That was page 116. At first, the accounting firm came up with a financial statement that showed large losses and a negative net worth for the company. In other words, the company was losing money and owed more than it was worth. Undaunted, Mr. Goodman told the accountants to get back to the grindstone and try to figure out a way to show a profit, and the accountants did. After a number of rather large companies went bankrupt right after issuing annual reports that show them to be solvent and profitable, a lot of people became concerned with the practices of the accounting firms that were certifying such reports. Accounting firms themselves became concerned. In 1986, for example, the accounting firm of Leventhal and Horwath issued a booklet that informed the public that audited financial statements aren't 100% correct. They're simply not wrong by a material amount. Auditors don't tell clients what to report. They just cooperate to make accounting meaningful according to this booklet. Leventhal and Horwath's booklet cautions that an audit can detect fraud only if it's major. I guess the fraud of OPM leasing services involving 225 million wasn't major enough to be detected. Ridiculous, guys. And they try to mess with the little guy, right? What constitutes major fraud is a good question. In 1989, the Federal Home Loan Bank Board filed suit against some of the biggest accounting firms in the United States. It seems these firms had audited some savings and loan associations and had failed to uncover large losses, fraud, and mismanagement, all of which led to the bankruptcies of many of the associations. On more than one occasion, an accounting firm had audited a savings and loan and given it to an unqualified option, meaning the auditing firm found nothing wrong and that the financial statement prepared by the Savings and Loan Association fairly represented its financial condition. However, within days after the audits were conducted, the Savings and Loan Association went under and had to be rescued by the Federal Home Loan Banking Board. Some had losses in the neighborhood of 2 billion. But then 2 billion in fraud isn't major enough to detect. I guess so the accounting firms aren't to blame. For shame, guys. That's page 117. Sorry I stammered a little bit. It can get like that sometimes. We're going to finish off on page 118. Oh, there goes my printer. It comes on by itself. You can see how this can be a very extensive topic. See how it goes into that page too. So not to overwhelm you in one video, this section looks pretty interesting too. So we'll finish on this page. Banks and non-performing assets. Banks are certainly not adverse to using accounting doublespeak. Just look at the way in which banks deal with bad loans these days. When people borrow money from a bank, they are supposed to pay it back with interest. That's how banks make money. When people borrow money from a bank and don't pay it back, the bank loses money. When people don't pay back the money they've borrowed, the bank had a bad debt, right? Wrong. An accountant would never say something as negative as bad loan or bad debt. When the First National Bank of Chicago had 23 million in overdrafts by a currency exchange and gold dealer in Jordan in 1986, the overdrafts were classified as non-performing assets in the bank's fourth quarter financial statements. When you realize, guys, when you learn the banking system, which I try to go into in my other channel, it's funny how they talk about loans, but I actually did a video so telling, so spiritual. I just did a video on my Dia Dash talking about where the credit really does come from. And at once upon a time, this statement would have so-called been true, but they really don't loan you a damn thing. And that's why it's considered an asset on their books. So I can see why they call it that, because debt is an asset, if you didn't know. What do you think the odds are that those non-performing assets will ever stop performing again? When the Continental Illinois Corporation the sixth largest bank holding company in the country in 1982, that its non-performing credits increased 44% in the fourth quarter to 653 million. It was really reporting that it had 653 million in bad loans and might never see any of that money ever again. Well, if you didn't know, there's something called a bad debt deduction. Sorry, on the IRS website, you can write off bad debts as a tax credit. Just so you know, if you're having that issue yourself. In an article for the New York Times in 1985, John Kenneth Galbraith commented on the use of doublespeak by banks. Once upon a time, Galbraith wrote, loans that were not paid in full were in default. Now, however, such loans are rolled over or rescheduled, or they become problem loans, or best of all, they are non performing assets. Galbraith went on to add a personal story. It seems that the son of a banker had a bad accident with the family car. The son reported to his banker father that the car wasn't totally destroyed, only rendered permanently non performing. Using such doublespeak can avoid reporting a very unpleasant reality and maybe even prevent the bringing the wrath of stockholders down on the bank officers who made all those bad loans. It may even be that banks learn this doublespeak from their corporate clients. You know, the corporations that are never in the red, but just experience negative cash flow. It's time for us to start using these jargons, guys, right? These different type of buzzwords. Maybe we'd be better financially too, but I find it really funny how they call it non-performing assets. But if you didn't know, like the Federal Reserve note, what you call a dollar, is a debt instrument. It is indeed a debt note. That's why the national debt keeps rising, if you didn't know. So this is page 118. We're going to leave it off here, but that was definitely an eyeful. And we're going to kick back up on the wonders wrought with accounting doublespeak. Sorry, guys, that I'm a little bit shaky with my reading. I'm just really tired. It's been a long day. I already uploaded on my prior channel, and I definitely wanted to make sure I came back to you guys. I didn't just want to leave you hanging. I seen that more people subscribed. I appreciate you guys. Stay tuned for more. I'll try to keep this more consistent this week. That way we can get through this book. I did promise you guys that. And this way you guys can get some free information, and hopefully I can spark your love of reading again too. All inspired from that awesome show from PBS, The Reading Rainbow. And this is kind of like the new spin 2.0. So thanks again, guys. I hope that that was educational. Again, please excuse my speech. I'll try to be more smooth next time, and I hope you guys have a great night. Take care.